Hey everyone, and welcome back. So as I'm sure you've seen, there's been a lot of news that's come out around Asos just after I made a pretty small but still an investment in Asos. 4 days ago, I made an investment that represented about just under 3% of my portfolio. 4 days later, a lot of news has come out about the company in regards to changes in the management team, as well as an early release of their financial results, all of which has sent the stock down over 15% in the last couple of days, which is very ironic. I mean, it's the rule of investment, right? As soon as you invest in something, it's gonna fall down immediately. I didn't think the markets would take it so literally in regards to this investment. But in all seriousness, I think this event, me investing in a company and then a substantial change to the underlying business, that being the management team, happening immediately after and causing the stock to go down, I think this is going to be a really good example of how you should navigate something like this, how you can keep a rational mind and make a rational decision about what you should do, because it's very difficult, or it's very easy, I should say, to make emotional, irrational decisions right after you've invested in a company. So you need to kind of remove or forget that you're invested in the company and think about the business objectively as it looks right now. So in today's video, I'm going to talk about the financial results for Asos that came out this week, their 2021 financial results. But before I get into that, I am going to talk about the management team changes, in particular, the change of the CEO who has been at the company for 12 years and is now stepping down unexpectedly. And of course, around that and the financial results, which were not well received by the markets, I'm going to talk about how I think those impact my investment that I've made so far and what I will be doing going forward and how I'm thinking about that. If you do get some value out of today's video, I would very much appreciate it. Take the 2 seconds to leave a like on the video and hit subscribe if you want to stay up to date with content that I post in the future. But with that said, let's jump into the video. So of course, the big news that first came out around Asos this week was the news that the CEO, Nick Beighton, had unexpectedly announced that he is stepping down with immediate effect from the company. A statement from Asos said that the board had agreed that this was the right time for him to go after 12 years at the business and 6 of those years in the role of Chief Executive Officer. Initially, Asos didn't give any reason why or any specific reason for his departure, but eventually the chairman actually spoke to some journalists and told them that Beighton could not commit to staying at the company or staying in the CEO position for the next 5 years, or even he said that he wouldn't commit to staying at least half of the next 5-year phase of the business, which is this new plan, this new strategic plan with goals, 5-year goals that the business has put in place just this year. So Beighton decided or said that he couldn't commit to that. And as a result, they thought that, well, if you're not going to commit to stay during the entire 5-year strategic plan, then we may as well get a new CEO right at the beginning of the plan so that there isn't any disruptions during this next phase. And this actually isn't the only change to Asos's management team and board of directors that is happening right now and over the next few months. Asos chairman Adam Crozier is set to step down next month as he is going to be taking over as chairman at the UK telecom giant BT. Ian Dyson will become the next Asos chairman. The chief financial officer Matt Dunn is going to take over the role of chief operating officer and will lead the day-to-day business while they look for a new CEO. And Katie Mecklenburg will be acting as interim CFO. And this, of course, is all a major change to the business. For those people who follow my channel and follow the Warren Buffett investing principles that we apply to businesses when we're looking for investments, one of the 4 key pillars that we look at is, of course, the management team. And one of the most safe ways we can invest in a management team is by looking for companies where there have been very, very little changes to the management team over the past 10 years. And the reason why is because we get to see a 10-year period of their performance at the business and also a track record of their transparency and how accurate they've been at projecting forward in terms of strategic goals over that time. So when you have a management team like Asos that has changed a number of times now over the past 10 years, it makes it a little bit more difficult to assess them. And certainly with the changes that have come just recently, just over the past week, it means that we need to reassess management in a rational and logical way. And the truth of the matter is I need to set aside the fact that I've invested some money and am down on the stock aside. That doesn't matter at all to how I need to assess the management team as it is right now. Because let's say that I reach the conclusion that there is too much uncertainty about the management team, that I don't trust that they can be transparent or that they have the shareholders' interests, the best shareholder interests at heart, then it doesn't matter that I'm at a loss currently. I will sell the investment because you do not want to have a business that doesn't have a good management team in your portfolio. I've already begun the process of looking at the remaining members of the management team and the board of directors in more detail, looking at their compensation plans, looking at the new strategic goals and how that's going to be woven into those compensation plans, the stock ownership of the management team, and then also some of the management or the board of some of the new directors that are coming into the company, having a look at where they're coming from and whether they had a good track record at those businesses. But ultimately, Asos hasn't yet announced who the new CEO will be, and that is going to be a critical part of assessing and deciding whether I trust the new management team. So I have to wait for that to happen. I believe they'll probably make an announcement in mid-November. They have a capital markets day where they'll be talking more about their strategic goals, and it's likely that they'll probably announce a CEO position at that time. But until then, I'm kind of just waiting to see what happens, and of course, spending time learning more about the existing management team. But the changes to the management team does not mean that I'm immediately selling the investment. The rest of the business is still very strong. I think it's a business that I deeply understand. It's in a very fast growing industry with a lot of opportunity to expand internationally, and they've developed considerable competitive advantages. So I'm still looking at the management team, and outside of the changes to the CEO, there are other aspects of the current board of directors that are still very, very good. The founder, of course, is still on the board of directors, so he is still involved in making decisions about top-level management and owns a considerable piece of the business as well. So it's not as if the CEO that was there for the past 6 years was my entire thesis on the management team, and now that he's gone, I have to scrap the investment. It will be an ongoing look over the next couple of weeks at them, and then I will make a decision. Also on Monday, Asos decided to expedite the release of their financial highlights for 2021. So with the announcement of Nick Beighton stepping down as CEO, they decided to bring forward their event around 2021 financial results. So we get to see the highlights. The annual report isn't out just yet, but we can see some of the top level numbers and what the business is expecting to see over the next 12 months. For the year 2021, revenue came in at £3.9 billion, which was up 22% on a constant currency basis year over year. Gross margin came down a couple of percentage points from 47.4% to 45.4%, and that was primarily due to increased freight and duty, but also due to a change in the category mix, the product mix. For Asos and other retailers online, since really the start of the pandemic, outbound freight costs, so freight costs from Asos to the customer, have been elevated. So that's kind of been a consistent trend over the past 2 years now, or 18 months, I should say. But now actually inbound costs in terms of freight, so coming from suppliers being shipped into Asos warehouses, there is substantial supply chain issues that are actually not even at the worst point yet. They're expected to continue to worsen into 2022, and that's causing a significant increase in the cost for the business and putting pressure on their gross margins. In my opinion, this is an example of a short-term event. This is a short-term supply chain issue that is resultant from the pandemic, which will not last forever. These are supply chain issues that will be resolved over time, and we should expect that freight costs will normalize. We don't know when that's going to happen, whether that's over the next 12 months, the next 18 or 24 months, but we should expect that that's going to happen over the long term. So when investors get concerned about things like this and guidance over the next 12 months, it can often push the stock price for those businesses down. And if we're investors that can have a long-term perspective and are willing to hold businesses through short-term turbulence, then it really doesn't matter what kind of impact to profit margins it has, as long as, of course, the fundamental business is still strong and there is still strong demand throughout the different regions for their products. And this is just one example of some of the short-term headwinds that the business is facing, but I think it's a good example of how their financial results were really bad for this year, or at least they're not being accepted well by investors. But if we just remove the CEO changes and the management team changes and just look at the fundamental business, I think some of the short-term problems really give an opportunity, or may give an opportunity for me to invest more into the business if the stock continues to fall. But of course, we do now need to consider the changes to the management team and whether that has an impact to the long-term fundamental thesis. Also, if you're hearing a little bit of a whining from this direction over there, I brought my dog in here because she goes out there and barks at the postman, and he's been going around just now while I'm recording this video. So I brought her in here, and now she's whining to go back out. So if you're hearing a little bit of that, that's what that is. The company saw a 13% growth in their active customer base, which is now at 26.4 million active customers. And in terms of where that growth came from, primarily came out of the UK, their core market, which saw total growth of actually 36% in revenue and a 20% increase in their active customers. And then there was slower growth in some of their other regions. They only saw a 3% increase in rest of world, 9% in the US, and then 13% in the EU. In terms of their US business, growth has been a lot more moderate than it has been in the UK. And part of the reason is because they've been waiting to get significant infrastructure in place so that they could do substantial next day delivery and really good returns, and have a bunch of different really good experiential offers available to Asos customers before they push hard on marketing. And they're actually going to be pushing hard on marketing. That's what they spoke about on the conference call that I just listened to before. They're going to be increasing their marketing costs in the US, and now spreading the awareness of Asos really deeply across the US now that they have a really, really good product offering. In Asos's rest of world category, which includes Australia and New Zealand, they've actually been having a lot of problems in the short term, at least due to supply issues. So not only freight and duty costs are going up, but there's also substantial delays when it comes to shipping products across to Australia. And as a result, there's been wait times that have now pushed out to, I think 30 days is standard delivery from Asos to Australia, which is of course really, really inconvenient. And the result of that has been that they've actually lost market share to local brands which have product stored here in warehouses here and are able to ship out products still quite quickly to Australian customers. Again, I think this is a short-term problem because when supply chain issues are fixed and shipping times come down, again, shipping costs and shipping times to Australia, people will go back to the Asos that they know and love for the massive amount of products that are available from the different brands and Asos's brands, and also for the pricing and the quality of those products. And just to finish this video off, I do want to talk about valuation a little bit, and there's really not too much to say here, to be honest. I think my valuation thesis is relatively unchanged, of course, contingent on looking at management and the new CEO. That doesn't really affect my my valuation, I don't think. I don't think it's really possible to assess what valuation would be if one CEO was in power versus another, but there's a pretty high benchmark that I have for the management team. And if that benchmark is satisfied, then my conservative valuation has relatively stayed unchanged. The management team also announced, as I said, some 5-year goals, and they had some 5-year goals and then some 3 and 4 year goals. So in terms of 3 to 4 years, they're looking to achieve £7 billion of global revenue. So that's their target. And I actually compared that to my models that I had already made before they'd announced those goals, and that puts my models, or about my middle model, perfectly in line with the management team's targets. So in other words, if the management team does hit the goals that they expect in the next 3 to 4 years and then continue on that trajectory over the next 10 years, then my valuation models will be fairly accurate. So that gave me a little bit of confidence as well. So with all of that said, I hope you guys got some value out of today's video. I can see my camera's about to die, so this might go to audio only just for the last 10 seconds of this video. Maybe it won't, and maybe I've just made a fool of myself, but I hope you guys got some value out of today's video. And if you did, make sure you leave a like on the video and hit subscribe, of course, if you want to stay up to date with content that I post in the future. But with all of that said, I hope you guys have a great day, and I'll see you in the next video. Hey, it looks like the camera lasted. I really thought that was going to die just then, but hope you guys have a great week, and there'll be more Asos content coming very shortly. See you later, guys.